We welcome viewers to this live broadcast at 5 o'clock. Today, White Pearl Technology Group has published their year-end report for the fiscal year 2025. And joining us here in the digital studio is Ebrahim Lahers, who is founder and strategic advisor to the company. Welcome, Ebrahim.
Thank you.
So I'll begin by running through some of the figures for the report. You could report revenues of 147 million SEK compared to last year's fourth quarter of 84. When you look at the EBITDA, it came in at 86.2 million from 50 million last year. How do you view these figures, Ebrahim, and how do you view the quarter?
Yeah, I mean, look, we're very proud by what we achieved in the business. The business continues to grow at a significant level, and I think there's a lot of structural and other parts of the business that are now in a very, very healthy position.
And if we zoom out and instead of looking at the quarter, looking at the full year of 2025, you could report a 65% growth in revenues and a 72% growth in EBITDA. How do you view these results? What is primarily driving this growth?
Yeah, I mean, I think White Pearl continues to grow both organically and inorganically. We grew 70% our revenue inorganically through the quarter. Through the year, we also grew our profit 68% organically through the year. So I think the business as a whole, the platform that is White Pearl, continues to grow and I mean grow very, very well.
And in the same sort of scope, when you look at the full year, your EBITDA margin came in at 16.9%. Your margins today, how do you view them?
Yeah, I mean, I think the most important point for us is that for the year, our margins improved, and I think improved very, very well, as you say, to, I mean, almost 17%. This shows that the underlying business is becoming more profitable. I think the Q4 margin has dropped compared to 2024, and that's primarily affected by us taking a very conservative accounting treatment of the acquisition-related cost. There was a once-off acquisition cost of around 3 million SEK to the quarter, and I think that directly went through the income statement. These included professional fees and some other acquisition closeout fees. Now, because the quarter is unaudited, we chose to take the most conservative approach and to expense these items immediately. Some of this cost could have been capitalized, which would have lifted our Q4 margin significantly above 15%. So we believe this is not a structural margin issue. However, it's simply a conservative accounting decision in an acquisition-heavy quarter. The full year numbers show that the trend is upwards in terms of margin. And given the mix of products, we have AI, our own products, IP solutions, we expect these increased margin trends to I mean, definitely feed through 2026 and beyond.
Could you elaborate a little bit on what acquisition this relates to?
Yeah, I mean, we did a number of acquisitions. The Spotter acquisition went through the books in the last quarter, and I mean, that was quite a significant acquisition where we purchased a group of companies in Sweden. And I think that was the one which primarily cost related to that were taken through the income statement during Q4.
So am I interpreting you right then that this sort of margin press, it's once off and you don't really count on it continuing?
No, absolutely not. Absolutely not. We believe that margins are improving. The mix of products we have in the business through our own IP, AI, certain solutions that we've been developing and selling over the last 2 years will definitely fuel not just better results into the future, as in revenue growth, but also significant improved margins as per our communicated guidances to the market.
Let's circle back then to growth. For 2026, you wish to reach over 20%. How will you achieve this?
Yeah, I mean, okay, 2025 for us was primarily about building the platform. We completed several acquisitions, as we've discussed. We've expanded our European presence significantly. Europe now makes up 29% of the revenue in our business, and we've integrated new capabilities into the group. For 2026, we believe that growth will come from 3 main areas. The first one is organic growth. Like I said to you, 68% of our profit growth during 2025 was already organic, and this shows that the underlying businesses are performing and performing strongly. Secondly, cross-selling across our platform. We are now able to offer European clients delivery capability in emerging markets and emerging market clients access to European solutions. We believe this creates a significant multiplier effect rather than just additive growth. Thirdly, we'll continue doing selective acquisitions. We'll continue to acquire, but with discipline and stability. The focus now for us is on strategic targets that strengthen our platform and improve our margins. So we believe that the 20% target is not dependent on aggressive M&A. It is driven primarily by organic growth, cross-selling, and selective value accretive acquisitions.
Can you specify what sort of disciplined acquisitions mean?
Yeah, I think for us, it's about free cash flow acquisitions, which are able to then fill areas of growth that we see across our solution stack or our platform globally, and also identifying products and solutions which will continue fueling growth as market continues to demand it over time. And I think that for us is, how we would see our acquisition strategy into 2026.
When I read the report, I noted the statement, a platform, not a holding company. What does that mean?
Yeah, I think for us, a conglomerate, normally is a collection of unrelated businesses. We see a platform as an integrated operating model where each part strengthens each other. At White Pearl, every acquisition is selected because it adds a capability, a specific capability to the group, whether it is cloud, AI, cybersecurity, or any vertical solution. These capabilities are then shared across our platform. For example, a European client can use our emerging market delivery centers, while a client in Africa or the Middle East can access advanced European solutions that we may be selling in the Nordics or somewhere else in Europe. And I think this creates significant cross-selling and margin expansion as well. So as White Pearl, we are not just buying revenue, but we are actually building an integrated digital transformation platform where the whole is worth far more than the sum of the parts.
Thank you very much, Ebrahim Lahers, founder and strategic advisor at White Pearl Technology.